Is the Austin housing market a bubble waiting to pop, or are we just in a new normal? Hey y'all, I'm Ryan Gomillion, and I'm your Gomillion Dollar agent right here in Austin, Texas. Whether you've been waiting for a market crash or you're wondering if it is the time to buy, this video is for you. Today, I'm breaking down what a real estate bubble actually is, how Austin's current market stacks up, and whether or not we're heading for a pop. Stick around because I'm also going to cover what this all means for buyers in 2025 and how to move forward with confidence. Let's jump in. A real estate bubble happens when home prices rise rapidly, driven not just by fundamentals like supply and demand, but by speculation, hype, or fear of missing out. Here are the classic signs of a bubble. Prices rising faster than income growth, easy access to credit or risky loans, buyers purchasing homes as short-term investments based on speculation instead of long-term living, and an eventual point where prices become unsustainable and start to fall. We saw this in 2008, fast rising prices, risky loans, and a huge crash that followed. It was a market built on shaky ground that tumbled quickly. But is this what's happening in Austin right now? Now let's look at some facts. As of mid-2025, the median home price in the Austin-Round Rock metro area is around $425,000, down slightly from the peak in 2022, but not a dramatic drop. Prices have largely stabilized over the past 12 to 18 months, with some price points seeing more stabilization than others. Interest rates are in the mid to high 6% range, a bit higher than what we saw in 2020 and 2021, but they've cooled a little bit from 2023 highs. This has impacted buyer demand and monthly affordability, slowing price growth. We haven't seen any rapid mortgage rate changes up or down in the past 2 years. It's been more gradual than during and after the pandemic fluctuations. Inventory is up, but not quite skyrocketing. We're seeing more balance in the market. It's not a seller's frenzy anymore, and it is inching more towards a buyer's market as the weeks progress. Right now, it's kind of in that in-between space as buyers feel out the economic uncertainty and as sellers try to adjust to the price levels that buyers will make moves at. And most importantly, lending standards are much stricter than they were pre-2008. No stated income loans, no zero down ARMs handed out like candy. Despite what the media says and what you hear online, many steps were taken to prevent a lending situation like that from ever happening again. The Austin area housing market looks a little different when you lay out all the facts like this. So let's line this up. Is there rapid price growth? Austin had this between 2020 and 2022, but not so much now. Is there unsustainable price to income ratios? They've normalized slightly, still high, but not irrational based on incomes in Austin. Are there risky loans? Nope. Lending standards are strong. Is there investor speculation? There is in some areas, but it is down significantly from peak investor activity in 2021, thanks mostly to higher lending costs, decreasing profit margins. What we do have is a correction from pandemic highs, a shift in demand due to rates and affordability, and a lot of media noise, which can create some anxiety even if the fundamentals are strong. So is Austin in a bubble? Based on the data and definitions, not really. We are in a market correction and not a crash, and that's an important distinction. Austin's long-term fundamentals are still strong. There's a steady population growth, even if it is less than what it was during the pandemic. There is a diverse job base beyond just tech. Manufacturing, medical, and financial services have a strong presence here, and there are many company headquarters located in Austin. There is a desirable lifestyle market with remote work, outdoor amenities, and no state income tax. There is constrained land availability in the urban core. We're also seeing more move-up buyers, relocating families, and remote workers than speculators or flippers. So while the growth is slower, the demand is more stable. This creates opportunity and not panic. So if you're a buyer, what should you take from all of this? Don't wait for a crash. This doesn't look like one. Prices are correcting and are not in line with a 2008 era crash. Negotiate smart. Sellers are more open to concessions and buydowns. You can also negotiate for financing costs depending on the purchase. Think long-term. Focus on homes you'll live in and hold, not just flip. Consider your 3 to 7 year plan when purchasing your home. Get your financing locked in. A great lender can help you navigate this rate environment. You want to find someone that is easy to work with and creative when it comes to getting the best rate for you. Yes, prices aren't as low as they were 5 years ago, but neither is rent. And while rates may feel high, they've already improved from where they were last year, and a refinance is an option in the future. So, is Austin in a real estate bubble? No, it's a post-boom market finding its new balance, almost like it is correcting to where prices would be if we didn't have the pandemic boom. This can be a great time to buy if you approach it the right way. If you're thinking about making a move, I'd love to help you strategize, whether you're buying your first home, investing, or relocating to the Austin area. Drop any questions you have in the comments, like and subscribe for more real estate related content, and feel free to reach out to me using the information in the pinned comment below. Thanks so much for watching, and I'll see y'all in the next video.